Investment in construction went off a cliff between 2008 and 2009 as the financial world descended into turmoil. But now there are signs of optimism as the distance between the crash and the present day grows. It seems as if there's been talk of optimism almost every year since the dramatic events that led to the extraordinary graphs which appeared to show unstoppable slides in all markets around the world. The recovery has been forecast, sometimes in very vague terms, but there's been little sign of any tangible turnaround in fortunes, in Europe at least. Maybe the time has now come, and the optimism which has been in the hearts of the construction industry, if not on their spreadsheets, it may blossom at last. The signs are there. For example, a small amount of growth in the overall EU construction industry has been reported for 2014 by FIEC, that's the European Construction Industry Federation. That trend is forecast to continue in 2015. FIEC Vice President Jean-Louis Marchand, who is responsible for economic issues, said that it looked like the construction industry had hit rock bottom in 2013. Finally, 2014 was a turning point, he said. There was a note of caution, however, as he pointed out that the return to growth remained very fragile and that it started from a very low level. He said EU total construction output amounted to 1.21 trillion euros in 2014, which represented a small increase of 0.7% over 2013. However, this small increase translates into a great many euros when you're talking about a percentage of 1.21 trillion euros. He said the industry would need time to catch up with the pre-crisis levels, but at least this positive trend seemed to be continuing in 2015. He forecast a rise of 0.8% for this year. It could be queried how much a return to pre-crisis levels is desirable, as at the time of the crash there was an unsustainable and unrealistic peak. There's still plenty of room for growth, but a climb to the dizzying heights of 7 years ago might not be too healthy. FIEC's statistics showed that behind the small growth for the EU as a whole, huge disparities remained between northwestern countries and southeastern countries. Looking at total construction, Greece's precarious situation continues to cause concern. There have been consecutive falls over the last few years and a slide from the 10 billion euros in 2013 to an estimated 8 billion euros in 2014, and it seems to have left Greece with practically nowhere left to fall. It slipped a couple of places in the EU rankings too. Portugal was another faller from 12 billion euros to 11 billion euros, while Romania dropped from 10 billion euros to 9 billion euros. Other fallers included Denmark, 27 billion to 22 billion, and Finland, 31 billion to 29 billion, plus, perhaps more surprisingly, France, with 166 billion euros to 164 billion euros. France was the only one of the top 5 to report a decline. At the top of the league table, Germany improved from 271 billion euros to 293 billion euros. France stayed in second place, but the UK closed the gap somewhat with a rise from 143 billion euros to 157 billion euros in 2014. In fourth place, Italy saw a welcome improvement of 129 billion euros to 135 billion euros, while there was a large gap before the next country, Spain, with output of 95 billion euros in 2014. This was up from 93 billion euros 12 months earlier. There is, of course, some cause for celebration that the Italian and Spanish markets are moving in the right direction after a torrid few years. Outside the EU, Switzerland was up slightly, 50 billion euros to 52 billion euros, while Norway rose from 52 billion to 55 billion euros. For a majority of European countries, the recovery has started, slowly, and FIEC said that in particular, The house building segment regained significant momentum in 2014, up 2.3%, and was now leading the way. It said this trend was expected to continue at a similar pace in 2015, with a rise of 1.6%. The non-residential segment was said finally to have stabilised, with a fall of just 0.1% in 2014. It's expected to remain level in 2015. FIEC said that against this backdrop, the civil engineering segment was still struggling to recover at minus 2.1%, and that most EU member states were not investing in public infrastructure, although there is certainly an increasing need. In spite of the troubled period, the construction industry remains one of the major engines of Europe's growth, according to FIEC, which added that construction represented 8.8% of the European Union's GDP and 3 million enterprises, the vast majority of which were SMEs, small and medium-sized enterprises. With construction work increasing for the most part, that should be good news for machinery manufacturers. Indeed, off-highway research said that unit sales of construction equipment in Western Europe increased by 11% in 2014 over the previous year. Covering Austria, Belgium, Denmark, Finland, France, Germany, Ireland, Italy, the Netherlands, Norway, Portugal, Spain, Sweden, Switzerland and the UK, off-highway research said that the 2014 total was close to the recent high point of sales in 2011. However, it warned that this was still some way below the 10-year average. The average from 2005 to 2014 was 139,360 units, 12.5% higher than total sales for 2014. The 10-year average, of course, encompasses that massive pre-crash peak, however. The figures are moving in the right direction, though, with the exception of Belgium, minus 4%, Finland, minus 3%, and France, minus 1%. All the countries measured by off-highway research recorded positive numbers for 2014 over 2013. The slight fall in the French figures was attributed to a lack of investment in both the public and private sectors, which off-highway research said had led to the postponement or cancellation of many public works projects. Star performers included Ireland, which was up 35% over the previous year to more than 1,000 units. It has to be noted, however, that there was an Irish low point of just 487 units in 2011. Similarly, Spain was up 31%, but it still sits considerably below its 2010 position. Once the region's fifth biggest market, it suffered a 95% collapse between 2007 and 2012. The UK now sits at the top of the league, having last held that position in 2007. It has pushed Germany into second place with a 27% rise in sales of machinery. Off-highway research said that only backhoe loaders and rigid dump trucks recorded a drop in sales in the UK. All other sectors grew, with mini excavators and telescopic handlers showing strong growth as rental firms upgraded their ageing fleets. Germany reversed a decline seen a year earlier and saw an overall rise in sales of 8%. In Italy's case, 6 consecutive years of decline ended with a 13% rise. To put this into perspective, though, 30,000 units were sold in Italy in 2007, compared to fewer than 7,000 last year. Looking ahead, off-highway research sees the general growth in the region continuing over the next few years. It warned, however, that the political uncertainty in Ukraine was having a negative impact on sales of second-hand equipment in Eastern Europe, and therefore on new equipment in bordering countries. Most of the countries analysed were predicted to show an increase in 2019 compared with 2015, with Spain up 135% off its low base, Italy up 69% and Portugal up 68%. Austria, Germany and the UK were forecast to peak in 2015, and to slip back by 2019, however. The UK figures in 2019 are predicted to be 10% below the 2015 position. Off-highway research said that while signs were encouraging, much depended on the willingness of governments to invest in infrastructure and housing. FIEC estimated that the share of the construction sector in EU GDP, gross domestic product, in 2014 was steady at 8.8%. This varied according to the country, with Bulgaria's construction sector notching up 14.3% of GDP and Finland 14.2%. Germany's figure was 10.1%, France 7.7% and the UK 7.6%. Greece managed just 4.4%, Croatia 4.7% and Hungary and Ireland both 4.9%. The differences, as with many national aspects of the construction industry and its chosen machinery, are marked. FIEC's Marchand said that although overall business in the construction industry in the EU was likely to see a slight rise in the next few years, supported particularly by the British and German markets and to a lesser extent by the end of the decline of the Spanish market, the arrival of a more marked recovery, which would stop the decline in France and Italy, would depend largely on whether all the stakeholders were able to get behind the political will embodied by the Juncker plan, and also on the effectiveness of the tools which are meant to support it. European Commission President Jean-Claude Juncker presented his investment plan for Europe at the European Parliament in Strasbourg in November 2014. He said that the €315 billion in investment over the next 3 years, which is in addition to existing funding, would include transport infrastructure. In June 2015, Juncker addressed the FIEC Congress, saying that the plan which bears his name must be a success. Juncker added, however, that an investment plan itself was not sufficient, and that it was essential that a global background allowed companies to operate in a peaceful setting. He also said that without simplified, smarter legislation, the plan would not succeed. No growth is possible if we fail to pay attention to our industries in Europe, he said. Nothing is certain, it never is. But having hit the bottom, Europe does at least look as if it's on the way back. It's too early to break open the champagne, but there can be some element of confidence in the future. Confidence is an important factor, and a lack of it has been holding back the sector's progress in the last 2 or 3 years. Construction is important, not just in itself, but for the continent of Europe. As FIEC put it, the construction industry remains one of the major engines of Europe's growth. Let's hope the engines fire up and pull the industry and Europe as a whole away from the wreck of the economic crash that has been such a blight on the continent over the last few years.